Hi everyone, this is Rob Roy and welcome to the Elliott Elite U.S. Market Update. Let's get caught up on the U.S. markets for the past couple of weeks. As you can see, we are still in the consolidation pattern as we just make a bunch of ABCs, combinations of flats and zigzags. And recently we've actually broken above this high right here that was set back in the middle of June, which may very well give us the opportunity to move on up and test the recent highs, those that were set back in January. Wanted to refresh your memory about this zigzag that we had here, where we had the 38.2% correction. Look at that, how it closed dead on that Fibonacci 38.2% correction. And then using the fib extension tool, we can see that we did have that 61.8% correction. Now, we talked about that a couple weeks ago, but what I wanted to bring to your attention was as we came back down and tested these previous levels, we retraced all the way back to the 0% line and then moved back to the upside. So we retraced that entire C-wave extension, and now we've moved to start a new impulse move to the upside. So we'll see if this breaks out of this flat pattern. It will label it as a flat pattern until it's a confirmed zigzag, so that's the way it works. And we'll see if that ends up relabeling and moves further to the upside. A couple other things I wanted to show you about the market in general. On the SPY, as you know, we use that so that we can bring volume into the mix. And we did have a couple days here where there was some chop, and it looked like the market was trying to figure things out, trying to figure out whether or not it was going to break below this support area or not. It held. There was a little bit of a battle between the bulls and the bears, it would appear, and then we've had lower than average volume on this move to the upside, which does make that suspect. You have to keep that in mind, that we didn't have any one day of this entire move to the upside here with above average volume. However, that's not that unusual when you start another impulse. We've talked about that in past recordings as well. It would be very likely that if we put much distance between those highs from June and where we are now, because they just barely broke them, and if we break a little bit above that, that will likely kick some volume in, as people will be not wanting to miss out on the next move to the upside. We do have a bit of a wall of worry here. Things aren't quite as euphoric as they were back when we were making that vertical move towards the end of 2017. So that does give some fuel to the move to the upside, that not everybody is fully convinced that that's where we're going to go. I also wanted to show you the 200-day moving average, and that throughout this entire correction that occurred at the beginning of February, we never really closed below the 200-day moving average. We did one day back on the 2nd of April, and that was it. So that doesn't count as breaking below the level. So this is just an old-fashioned correction, and without breaking below that and closing below it, it's tough to be bearish on the market itself. Obviously, you can be bearish on individual stocks or shares and the patterns that they have, but not in the market in general. Looking at the VIX, find this interesting, that we are seeming to be building a low here at 12. Seems to be where the market wants to find support on the VIX. We'll see if we break higher at the beginning of this next week, and if that can break that area. But that's exciting for option traders, that the low is 12, where that was really in the area of where the high was before. We've talked about the past on the VIX enough that you can go back and watch previous recordings if you want to see more about the trading range. But I do like the fact that we seem to be, in at least for the past 3 to 4 months, in a range of 12 is the support level, 20 is the resistance level. That's elevated volatility. That's exactly what we want as option traders, and that's the exciting thing. Even if we were to break down below that, we started to build an awful lot of support in that 12 area. We've been looking at the US dollar, so I wanted to bring that back in as we still continue to churn in this wave 5, as you can clearly see. So we made the wave 4 correction, the wave 5. We haven't quite hit the target, but I would suspect that if the market does break to the new highs and some of that wall of worry, as I mentioned, tends to settle down, then I do think that we will go up and reach that wave 5 target there. Interest rates, very interesting here, that interest rates, even with the dollar kind of churning sideways, interest rates have gone down. I find that fascinating, and you can see that we've built a pretty nice descending triangle here, which is a really good Elliott Wave corrective pattern. We've talked about those, flats, triangles, and zigzags. So we have a really nice descending triangle. When we look at the Elliott Wave pattern, doing pretty much what it's supposed to do once a wave 5 is corrected. We've talked about this. Again, don't want to repeat myself. If you want further explanation, know we have some newer people. Please go back and watch the previous recordings, because there's a lot of really good material there. And also it gets you caught up on what's happening. But there was that beautiful zigzag there. Then we have this descending triangle, and triangles following a wave 5 are very, very common. And then we'll see if interest rates can continue to the upside, as we still haven't completed the big larger zigzag that I highlighted a couple of months ago. But everything else has been complete, and now with this descending triangle, it looks like interest rates are going to break out. Now remember, even though it's a descending triangle, that doesn't give us any sort of a nod as far as what direction it's going to go. It could break out either direction. When you have triangles, don't get caught trying to pick a direction, because the rules of the triangle are it can go either way. Wanted to catch you up on the case studies, MPWR, that we had looked at. We had that really nice strong wave 3, had our wave 4 correction, and now we're moving up in the wave 5, just working as well as it could have. Looking at Texas Roadhouse, we had that 127% we moved up after we had highlighted this one with our search that we created within Integrated Investor. I've got a new one for you. That's what I love about Integrated Investor and Profit Source, is the fact that you can create your own custom searches. And if you've been following along with us, you will find that our case studies that we've been looking at, and these are not going back, these aren't back tested, these are looking forward, have been quite remarkable with their accuracy. And you can do the same thing. You can create your own searches. So any of you that are listening that haven't renewed your data and aren't using this as your everyday charting system for your own trading, I really wouldn't understand why. So looking here, we have the wave 5 there, and we pulled back a little bit. That's just a little bit of a correction within the wave 5. We look at our fib retracement tool and see if that could be a zigzag, and then right to the 38.2% level. Now the tail of this day here on the 2nd of July did come down and touch 50%, but you can clearly see all of the consolidation there at the 38.2%. So I would use that as the retracement level. The close was back at that level as well, and then we have our extension, so right around 72 could be a new extended wave 5, but remember, it's already done everything that it's supposed to do. It's in an extended wave 5 now, and we're just looking to see where it could go from here, and that would be right in line with Elliott Wave rules as well if it continues to move higher. A couple of the older ones, UNP, following its big move to the upside, is going through a consolidation. You can see the ABCs here, and we've relabeled into a bunch of sideways patterns following the wave 5 completion back in January, and a little bit, not a great one, but a little bit of a descending triangle here as well. Express Scripts, this one did move back to the upside. Remember we were talking about this one where we had this area here, and we talked about in a past recording if we broke above that we could move higher. And then we talked about the fact that it gapped to the upside, and you don't really like gaps, and then it was coming back down. We'd filled the gap, we tested that level, and with all that in play, that could give it the opportunity to move back to the upside. It's exactly what happened. You can go back and watch the last recording, and you'll see that's exactly, pardon me, what we talked about. Everything we talked about occurred right to a T. And looking at the bigger Elliott Wave pattern again, the ABCs, but we've just absolutely nailed this one. And again, came from the bullish search that I've created within Integrated Investor. I wanted to add a new one, and again, this one just showed up on my search. It's on ULTA. This one's pretty interesting because we have the Wave 5 target up here around 280, and currently the shares are trading at 260. And when you have one of these patterns, you can put on any sort of a bullish position that you want. And that's the beauty of options, is there's several different ways that you can trade to the upside, downside, or even sideways. My preference is, when available, out of the money butterflies. You put an out of the money butterfly on, they're very low cost and therefore low risk, and they have high potential return. And the great thing about those, that if you're familiar with butterflies, you know that you like to have the share price move in between the wings of the butterfly, but it doesn't have to. If you put it out of the money, it's directional. So it becomes a directional trade, and any sort of movement to the upside, the position begins to gain value. It doesn't have to move between the wings. It makes more if you move between the wings, but it doesn't have to do that. And we're going to talk more about those things in the future. So keep an eye out for that. There'll be some announcements along those lines coming up down the road a bit. But I wanted to give you a new one, a new case study, and you can see we may bump in a little bit of a resistance area right here because we're right at the previous 3, and we had a big update on Friday. Look at the DMI, but the DMI does look like it's regaining some momentum. The ADX has moved up. We have good separation between the directional indicators, and it looks like it's showing that there's still enough strength left in this trend to go up and hit its target. So any butterfly would just be up in that area of where the 5 is. I can't give you individual investment advice like that, but you get the idea of where the positions could be, and other sorts of options trades that you could put on. So that does it to get you caught up on where we are. Hope everybody's had a wonderful couple weeks. We did have a holiday shortened week for the 4th of July here in the U.S., where we celebrated our independence. The market was closed that day and at 1 o'clock before that, so that was kind of a wasted week. But now you're caught back up to date. Take care, everybody. Look forward to talking to you again next week.